The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more into the breach do we go, dear friends. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
It does. And we've got a market that is markedly up on the day. We're going to see just what's going on and check in with the volume. Right now, we are up 11, almost 12 points. Volume is about 100 million short yesterday at this time, 2.1 billion shares on the New York Stock Exchange consolidated tape. 2187, so we were above. And of course, the headlines for tonight, if we were to close right here, would be yet another record close on the Dow or the NASDAQ or all the rest of them. But the magnitude of the moves here, pretty narrow. And we'll get into some of the stocks, but volume is tepid at best in the indexes, and absolutely missing from about 3/4 of the market. So we shall see how this comes on. Can we go higher? You can always go a little higher, but you got to be rather nervous when you break and continue breaking highs and volume continues to contract. So what else do we have going on out here today? Well, I am behind the 8 ball here just a little bit. So we will move on, but well, we'll see what was out here for news today. What else is out here? Well, this is actually quite apropos for today. On this day in, what is it, 1992. We had something in one of the biggest moments ever in the malls. Rome had its Colosseum. Egypt had its pyramids. China got its Great Wall. Today, the U.S. gets a monument. I can't even say it. Monument to sure to puzzle future archaeologists as the world's largest shopping center. The 650 million, 4.2 million square foot Mall of America opens in Bloomington, Minnesota. Soon to have a Macy's closed. Probably not, but that's why it's apropos today in 1992. I'm trying to remember. I think I went in this thing once and got lost. And a year and a half later, I made it back out the other side. It is a large mall. If you've ever been in it, it's got lots of stuff in it, including like a not a roller rink, but kind of like a circus part to it. Lots of stuff going on there. I wonder how it's doing today. Maybe someone doesn't know. I don't know. What else do we have going on out here? That's pretty much it for the news. It's been pretty quiet. We had some, let's take a look at here. We had some earnings news, and it was very interesting because, of course, for the last year, Macy's, Kohl's, all these companies continue to see their earnings estimates move down and down and down. What would we find out today? If you move them low enough that Kohl's will and some of the others will bounce, if you make the bar low enough, eventually even the probably most walking impaired can walk over the bar. That's kind of what we have today. It may be a little bit more of a few other things, but you do have some significant volume out here in Kohl's. And what is Macy's out there? I got the wrong thing up here. What is Macy's? M-A-C-Y. Just M, isn't it? Yeah. Just M. And a nice bounce on it with a nice volume. But caught a lot of people short. There's a few stocks that I don't want to be short on. But when you get a stock like this, you're going to get bounces. I mean, this thing was $73.61 just a little over a year ago. That it's back up to $40 here today on some short covering. Pretty nice. Can you make a case that volume below this December 22nd low never really was exceeded well enough? You really can't, because this thing did gap down with some heavy volume, 35 million shares on the 11th of May. It came back, kind of retested it with 10 million shares. You're getting a bounce out here now, but it's very tough for me to see that any of these stocks would have bounced today if they didn't have news like Macy's, which is they're closing 100 mall stores in the next year. It will help earnings. Is it going to help revenues? The answer is no. So this will be a double-edged sword. But trying to get these stores to a more manageable level and also getting out of probably the worst malls in America, probably one of the better things out here. What else did we have out here too? Coors. We've got a couple of these stocks that are just probably more telling the truth on the long term instead of the short term. It's hard for me to see a business that has to shrink to get better to be one that I want to be all over. You generally want to be on the upside swing of the stocks. Now, if you had a one-day pop in the stock, probably not a bad deal. But can't see a lot of future in these mall stores. Gap just came out with theirs. Maybe the earnings are okay for this quarter. But, man, when you look at the late part of July, very, very light sales for Gap. I suspect we're going to see the same thing in Macy's and Kohl's, too. We'll be back after this.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And yeah, we're looking at a lot of stuff out here, but yeah, man, it is tough to say that there is an abiding belief in one side of this market. When the upside, 0.5% is probably not a big sign of strength to the upside. Could we get to 2,200? And we could. Volume is just pathetic here, and that is the problem. As I said last week and the beginning of this week, seems to be on the long side that you're picking up pennies in front of a steamroller that could reverse on you at any time. And I don't like that. You may have a little bit farther to go to the upside, but if you did turn around, I suspect that 2120 is where this market wants to go. And the question is just when does it break? A lot of individual stocks out here are already showing severe signs, especially today, of light volume. So we'll wonder about that as we move along. We'll look at some other stocks and some movers out here. Let's take a quick look at a couple of them. I wanted to look at some of these Accordia Pharmaceuticals. Not a whole lot happening out here, but that's the point. Would have liked to seen this thing probably go up on volume today. It's going back after the May 20th, $23.85 low, 750,000 shares today. But yesterday, 482,000 shares. Pretty light volume today, 175. I would have liked to seen a sign of strength in some of these if the market was going higher that you could buy out here. Some of the retail stocks also giving some rather dubious flagging patterns out here, especially for candlesticks. Big Lots today went to $55.90. It's trying to get above this level. The volume is not all that exciting. What is that, right? 700,000 shares today. And that is the problem, that a lot of these stocks in this sector are just trying to break back out. There's nothing in that. Wanted to see how Dick's was doing today. This one had been coming right up to its gap down that goes back to May 19th with 5 million shares. It's up here. What do we have today? Let's call it 1 million shares. He had kind of 2 million shares, 2.2 million shares yesterday. But man, these things are getting kind of tired up here. A lot of these things like this one look like they've completed their ABC. And, you've only done really one. So could you pull back and get another? Certainly could. You'd probably want to see this thing come back to 49, though, and that becomes an issue. One of the stocks out here that popped fairly well yesterday on earnings. This is a failed IPO, and of course did nothing but go straight down from when it did IPO up north of $22. But has been trying to find a bottom out here, and sometimes you get some nice moves off of it. You did yesterday. You would have liked to seen some continuation in high volume today. Not so much on that. 578,000 shares compared to the 2.35 million shares yesterday. It is a nice bounce out here. You've got going right back into the candle of the 11th of May, though. That's pretty much where you're hitting resistance. And, of course, everybody that's in this dog is, talk about a supply line. It goes everywhere. JDST was one of the ones I thought was very interesting out here in the last couple of days. Zoom in here just a little closer. This one's been kind of coming in and going sideways. I know a lot of people have been looking for a pullback in gold. This is looking fairly good. It's come back into the Let's get the scale here a little bit better. This has been coming back into the low of the 2nd of August. That day you had 8.1 million shares. Yesterday you had 9.9 million shares. Today, 7.8 million shares. I would have liked to seen that volume really dry up from that 8.8. To say it, you're basically got a coin flip here with the volumes right now, which is not a good indication if you're long or if you think that you're getting your pullback, either one, not very clear. Pioneer Natural Resources, want to see how this one did. This one's been a high flyer on, of course, being in the natural resources business. April 27th, this thing did 171.88, 3.8 million shares, and of course, 800,000 shares today. If we just go through most of these stocks, we're going to see pretty similar stuff to that. And it's just not a great deal else going on. The QQQs are back up here at the highs. 1.3 million shares is what you're going into on the December 2nd high at 83.77. We've kind of hit that high with 660,000 shares yesterday. The day before that, you had 767,000 shares. Let's call it 1.2 million shares on the 5th. But today, you really need to start seeing some kind of sign of strength. 439,000 shares is not going to do it. And they continue to push this up. I really, really dislike the energy in this leg from June 27th to this high. If you looked on the down leg from December 2nd to January 20th, you had 3.8 on my power law vector indicator. On the move from February 8th to April 19th, the same thing, 3.8. You get a light volume pullback, which is exactly what you're looking for if you want this thing to pop and take the ride up. But almost the same dollar amount, and the energy has come off massively. You're basically looking at a 2.4. And you should look at these numbers kind of like the Richter scale out here. It's not half. It's about, the energy's off about 40%. So it is, this move in the QLD is very, very light as we've gone back up in some of these leveraged ETFs. And that's kind of makes you wonder about the stability, whether this market is, as I think, built on sand, and the first big storm will maybe topple some of these. Schlumberger, we've been watching this one in the newsletter for a few days. You had the big test of the top on half the volume. 12 million shares at 81.96. You pierced it, closed back below it, came back yesterday with some okay volume, 3.8 million shares. Today you're up on 2.7. So you're really going to want to watch how this one closes out today. But it's still not above that high and still has problems. What else do we have out here? Does this one? Yeah, I wanted to see how this one was doing. It's Sky People Fruit. We talked a little bit about it yesterday as one of the big stocks out here that is problematic at best for China. Anytime you see these kind of stocks, where am I at here? Smith & Wesson. Oh, that's the next one we want to look at. It's come back to this $9 level, but man, it's just, if I see a fruit juice company go up 1,000% in a handful of days, I really, really, really am nervous about the end of a market. This really makes me suspect, at least, about what's going on in China. When we're back, we'll look at Smith & Wesson today. Another spike. I cannot hold the high. Give me a call, 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're up 12 points on the S&P. Cash volume is still incredibly tepid at 2.2 billion shares. I'd call it 2.25 billion shares. So this is going to be a lighter day than yesterday if this holds. We had a lot of volume come in, about 3. But even if I added that volume, you're probably going to be 400 million shares short, even with the volume by the end of the day. So it's going to be a light day. So we are having a pop up here. And, you know, it's just hard for me to get too excited about trying to pick anything off long here, especially with the incredibly light volume and horrible action on just too many stocks. Yeah, there are a handful out here that are moving higher, maybe in energy, but that's about it. What do we have? March 18th, $30.44 in Smith & Wesson. Well, 3.1 million shares today. It spiked it with 1.1 million shares or 1.2 million shares. So I've been thinking about this one for a while, and it just seems like maybe at some point no one can afford yet another gun. And regardless of what the president comes out and says, maybe we've seen peak gun sales here in a while. ProShares Ultra QQQ. This one, with all the hullabaloo today, should have monster volume and a big candle. 1.16 million shares on the day. We are going back up into this 126.74 December 2nd high. But again, can we go back higher? Yeah, but I'm going to sit on my hands. I don't see anything else out here. On the way back down from this December 2nd high, to the January 20th low, 7.3 on my Power Law Vector indicator number, almost the same move from 81.80 June 27th up to this number. The energy is just very, very lacking. Tesla, kind of one of the more interesting stocks out here. We've talked about these asymmetrical trade patterns. And one of them that kind of is very interesting to me is this Tesla. Oop. Oop. Did I go to Tesla? Go to Tesla here. Come on. There we go. And it's making a big asymmetrical triangle here, but I didn't put it in the newsletter this way, mostly because these positions are probably, unless you're sitting in front of the monitor all the time and working on both sides and have a lot of expanse, this is one that's setting up very much for a close a week from today for 225, and the idea would be to put a spread on this to actually have it expire at 225. If you think the market's not doing a whole lot today, and I don't think it is, this is one of the weaker stocks, but they've been shorting the living daylights out of this thing. And if I haven't done it yet, but if we were to see a market that just goes sideways for the next couple of days, maybe Monday, I'd be really interested in putting a spread out on this one, probably a spread for September, and just collecting the cash on it through next week and through expiration. Because this one, there are stocks that always have a little wiggle room. The option market makers on this thing would make an absolute ton of cash if this thing closes at 225 a week from tomorrow's close. And I suspect that's exactly what they're setting up, a stock that will go nowhere and just bores all the shorts out of this. But man, have they been shorting this on a daily basis for a while, and doesn't seem to be able to affect it. You may even get a little bit of move to the upside. But I would think that maybe if you don't see any action on this thing, that maybe time for maybe if you want to think about a market that does nothing for the next couple of weeks, this may be the one to sell some fairly high and expensive premiums and put a spread on there to limit your losses. But I don't like that position a great deal because, of course, it never pays off big. But if there's nothing that's going to pay out here, that one, that trade could be one of the better ones out here in a sideways market. Weyerhaeuser, I've been watching this one for a while. This thing should have had everything it needed to break through the April 28th high. It went sideways for a long time, spiked it, came right back down in, tried to go back through it yesterday, no energy. Opened higher today, he's pulled back. Another one where everything out here in the housing business looks like we are so close to some kind of big sell-off in the housing business. And stocks, tend to look anywhere from 6 to 9 months ahead. So a lot of people are going, well, interest rates haven't gone higher now. Well, probably one of the biggest things you'll learn if you get into Jesse Livermore's book, Reminiscence of a Stock Operator, is when you hold a lot of stock, you just can't sell it in the next 5 minutes. You have to make a market that everybody believes that you can sell into if you're a stock operator. If you're a big hedge fund here, or if you're a big, just a really big regular fund, and you own, 10 million shares of a stock like this, what do? Well, you go out there and you beat the drum. You tell everybody how housing's just going to go through the moon. And as it goes up, every time it ticks up another dime, another quarter, what do? You come in there and you make sure that for every buyer, you're there at least as a seller. And that's what I don't like markets just going sideways at highs with no volume. If you get a thrust with energy and then it pulls back, that's kind of interesting. If it then pulls back and you get no volume, it's much more likely to roll over on the right-hand side of it. I probably would not short this one because of just how slow it moves. But I think when I look more and more at this housing market, it looks to me like they're betting on a November, December, or January hike of 0.5% after the election. And that's already starting to get into a lot of these stocks in the periphery of housing, maybe not housing itself. But again, markets look anywhere from 6 months to 9 months ahead. And if you see something or a big organic natural factor in markets that you know is coming, you got to sell before. If you got 10 million shares, you can't sell once the news is out, and that makes it problematic. But I continue to look at the numbers and the volume is light, and we're starting to see big men of the street go south, and some of these bigger funds are trying to find a way to get a door out the other side of the market. One before we want to look at here. What else do we have? I just wanted to check my mail real quick before we go to break. I'm going to look at Apple. This has made a rather spectacular and brilliant Gartley pattern. We'll talk about this a little bit more when we come back. We talked about this kind of on Friday. And another light volume doji, it looks like, today out here. We'll get back. We'll talk a little bit more about Apple.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
We've been talking about this one, and man, if you're looking for Gartley patterns, I don't know how it gets any better than this. I called or talked to Larry, or typed in the den to Larry Pesavento, I don't know, a week ago, and wondered about this thing when it broke the B point, about how I would look at that Gartley pattern. I try to avoid them, but this one's got basically the pattern on both sides. So I've kind of said, well, if it's good on one side, it's good on the other. A lot of times if I have a gap on one side, I really don't know how to that I should look at it. Now this one, you basically went through the same price point, which is right around that $100 B point on the Gartley. With a little less volume, not a whole lot less, but here's where you needed to see the volume really start to come in, because it was coming in and starting to accelerate off this high, which is on the 18th of April, was 61 million shares. So as we get up to that one, we had on the 9th, 26 million shares. Yesterday, we had 24 million shares. Today, 16 million shares and a doji. And I'm sure probably Steve Rhodes in his candlestick seminar last night talked about the doji out here, and how a lot of people look at that. Either if it's in a move down, it marks the halfway point. If it's at a previous low or a previous high, a lot of times the indecision is what it is pointing out. But to me, what I look for in these Gartley patterns is this, and I'm not going to be shorting Apple. Let me say there, it just does not move fast enough, and there's too many people involved in it, too many big funds. They can come out with a press release tomorrow. But what it is telling me is that there is a huge energy down, and there's about 65% of that energy back up from the C to D. And that's never a good pattern to have, especially going into very light volume with very few shorts in the market. Some of the, like I said, some of the big men of the street have already piled in right around this area, but there isn't a whole lot going on out there. Wanted to look at the IBB. It got right to support yesterday, and it has bounced. But my question was, what's the bounce going to look like? Are you going to have some kind of sign of strength out here? Yesterday, down on 1.3 million shares. Today, up on 1 million shares so far. So it even didn't go back over that. It's gone up a little bit. I think you can make some a case out here that this is cracked, this uptrend that started back on the June 30th in the IBB. And, I liked it, but man, the volume was just pathetic. I got out fairly early in this run because we had calls on this that we bought at the depths of the British exit back out here. I was buying from 246, started maybe 245. I'll have to look on my notes. I was buying calls all the way from 245 down to about 242 or so for the 250s for that Friday. So we had a nice bounce out of that. But this has busted down. That can kind of meander up here, maybe close once more again and then come down. It could, but man, the action in the stocks underlying this thing has just been horrible. We talked about a couple of the stocks yesterday that came down with that volume. And I would not be betting on this. It just, if this thing, if the IBB is going higher, my guess is it's going to be going higher late in September, that you've got a really tough road for the next 30 to 60 days in this thing. It's just very, very tough going out here. Let's see if I've got anything else that I wanted to look at. A few questions from the email. Okay, up 11 points on the S&P cash, 2.34 billion shares. So it is continuing to be tepid at best out here for any volume. Maybe we get some at the very end of it, but it just this looks like a market that's just kind of very huffing, like after running up a hill at high altitudes. Somebody wanted me to MSFT. And then I had a question that I forgot about in the den. Maybe someone can tell me who posted it a few days ago. But the question was about a nonlinear editing company, and I'll try to answer that at the very end of the show out here. And it wasn't Adobe. It was, I think it was Avid. Hopefully that is it. And apparently Basil's found some kind of missing leg. I wonder if that's like the missing link. Anyway, Microsoft, like I said, I've been looking at this one out here, and really, I've been probably the number one bull on this one, thinking it was going higher back in the mid-20s before Ballmer left. And of course, it really started moving once he left. This thing has not had a sign of strength since the breaking these 56.85 high and the last April 19th high at 56.77, which I think is suspect. Your best day out here was 26 million shares as it broke the high. You had 29 million shares the next day on a small candle, and it's just been very light volume out here. There are a lot of good things going to happen with Microsoft, but man, I couldn't be long with your money. Even if we made money and I only made money, I would feel bad out here. This is one of the scariest charts. Earnings has come and gone. Yeah, do they have some good news coming out? It is, but this thing really just looks to me like this thing is going to spot and splat right back into this trading range. I would be much, much happier if this thing came back to about 53 bucks. And at that point, maybe on the next move up, it would have some kind of sign of strength or move out here. And we're back in 2186 now. He's found the missing link. Okay. All of the Dow Jones 30 stocks are in the green. Okay. So if I went out and asked 30 people who was going to win the presidential election, could we just say that we didn't need a vote? We're just going to go with whatever the 30 people. I'm being facetious, of course. And that is that 30 stocks that have nothing to do with the greater stocks. In fact, if I don't know if I have time to get to it today, but if you go out and look at the tradable stocks in the marketplace and look at how many stocks would actually be statistically relevant, plus or minus 5%, you will find that the number comes out to, depending on how conservative you want to be, 360 stocks to 375 stocks, 372 stocks. So to me, 30 stocks, uncorrelated, not in any specific sector, 95% institutionally owned, probably couldn't be a worse index, could there? Could a bunch of monkeys with darts do any worse? It just doesn't do anything for me. Now, you tell me that 9/10 of the S&P 500 stocks are up on volume today. That would do a lot for them. But I'm not asking a handful of people who's going to be the president and figure that that is meaningful at all. That's why you almost never hear me talk about the Dow. We'll be back after this short timeout.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And what do we have up here? I just wanted to go to the IWM because that gives you a little bit of an idea. On the 5th, 29 million shares. The next day, we get 14.6 million shares. The next day, 12.5 million shares. We got on yesterday with 19.1 million shares. Today, we're up on, let's call it 16 million shares. Maybe do the same volume up here. But, 16, 19 million shares. You need a sign of strength, and you need to break it, and you need a lot of volume. Will numbers tomorrow morning do that? Maybe. My guess is no, though. At best, I suspect we're in a trading range. At the worst, we could start seeing a playback of August of last year. So what do you have out here? That's kind of a lit. Avid is the stock that someone wanted me to look at. And yes, I was direct competitors with these folks. Unfortunately, once we went public, the CEO, who knew very little about the business, decided he knew all about the business. In fact, we were in two different parts. We were in computer video and, of course, traditional broadcast television station stuff. I did the computer stuff. My partner in Cincinnati did all the broadcast television stations and a lot of that kind of stuff. But if it had to do with animation or had to do with that stuff, those were my products. He did a lot of the traditional black boxes that go in television stations, that kind of stuff. But we went up against Avid, which was a big video editor. The only way that I saw that we could do well in this sector, because of the huge amounts of software that you needed in this, was just to go straight to animation and get past editing. And of course, as soon as we went public, they decided to throw all the cash we had, and we were out of business in 2 years. What can you say? I got out early, and they will hate me forever. My partners will hate me forever for doing that. Anyway, what's going on with Avid out here? Avid, actually, its story has a lot more to do with NVIDIA than it has to do with anything else. And the reason why a lot of people don't really figure it out, I was talking to somebody yesterday, but NVIDIA's cards, their graphics processing units, are made to do a few things that are incredibly important that regular standard general purposes CPUs like the one in your computer now don't do. But they are incredibly good at doing a few things. One of those is adding, multiplying, and dividing matrices. And there is a reason why they call that movie The Matrix, by the way. A lot of all this stuff has to do with taking matrices and of matrices of different sizes and doing all kinds of mathematical operations on them. With the NVIDIA thing, its claim to fame and the reason why this thing is spiking isn't the game sales are that much higher. It is that everybody is doing a video and or high performance computing are using the libraries to go back and either compress video or do a lot of machine learning tasks and replacing things that used to be like mini and supercomputers for doing it. Avid's big problem now is that this is becoming a software-only business. They did much better when they had Apple, and Apple was actively pushing behind them. That is the biggest problem, is everything they have is tied to Apple, and everything is moving to PCs, and moving to PCs with NVIDIA cards in it to do the compression, and that makes it kind of tough out here. This is at a very tough level. Can they still do okay? Yes. Will they go back to their days of glory? I don't think so. Hang on for Tom O'Brien and Andy Heck today. So when you can, not when you have to. We'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.